Welcome to Next Level Up, and our guest today is Daniella Tedesco. I think you're going to really enjoy this episode and seeing what she's up to and how she's pivoted through everything. And so with that, obviously I want to just hand it off. Daniella, you want to tell us a little bit about yourself and how you got to the point you're at now?
My name's Daniella Tedesco. I'm the co-founder at NextRound Philanthropy and also a partner at NextRound. I started my career in the political realm, working with politicians and running mayoral campaigns. That was great, but I also realized that the landscape of a mayoral campaign, raising money, trying to share your story is very similar to the finance and VC world. So my skills were transferable in that sense. So I went in and I worked at a venture capital firm, learned how to vet deals, learned the specialty of what companies to pick, what their timelines are, how to interview companies. And I realized throughout that moment that I was saying no a lot because I was mandated to. I had a checklist. There were certain metrics that I was looking for, certain revenue metrics, certain metrics on who the team is that I said no probably about 95% of the time. And it was really disheartening, especially
I would think that would be pretty disappointing because I'm sure there are many of those 95% that you wanted to see get funded and get their idea going.
Yes. And typically those startups, there's nothing wrong with them at all, but I know that if they received funding, then they would hit the metrics that maybe we would invest in.
Yeah. So is it like traditional in that space? Is it like traditional money lending where if you don't fit the criteria, you're just out? You don't even have a chance to talk through what might happen if it's A, B, and C don't match, you're just done.
Typically, and the traditional venture capital language, or if you talk to a lot of investors are, oh, we love this, put us on your list, put us on your newsletter, let us know in the next 18 months when you hit our metrics. So now you're catering to the VC metrics and you're not actually working on your own pace and doing your own mission. So typically you have to switch and run on their timeline. And in high impact mission startups, those timelines are never going to align.
And then I would assume also, and we kind of talked about this a little bit on our first call, is with the political landscape, with people worried about money, those parameters could also shift. So now you've been working for a year to try and hit some next, target.
Yes.
And now the landscape changes.
Yes. So now I think I'd like to explain NextRound Philanthropy. So we understand the problem now of startups can't receive funding. It's inevitable that if you do not receive capital, you can't pay your team members, etc. You end up basically dying on the vine. And there are
cash flow kills you, right?
Exactly. And it's like, what comes first, the chicken or the egg? If these VCs really want you to meet their metrics and they need money to do that, it's so infuriating. Yeah. So then this got me realizing, the charity landscape, there are a lot of charitable people out there in the world. There are a lot of people giving to charities that work to cure and help with cancer, help with the climate, all walks of life. Over $500 million a year goes to charity.
Yeah.
500 billion. I'm sorry, 500.
I was going to say, I think you missed the M to the B.
Yes. Yeah. And recent statistics as of 2024 show that 7 billion went into early stage startups.
So comparatively, we're talking almost a 50, almost 60, 70 time multiple.
Yes.
Against what people are giving for charity events versus startup capital.
Yes.
That blows me away, honestly.
It really does. And it's clear that the intention is there. Like, people do want to help. But sometimes, unfortunately, when you donate to a charity, a lot of that money it has to be used in overhead and marketing and all these other areas where they need to continue their mission, continue their fundraising journey. And only a small percentage of it actually goes into the research. But say
I got it. So how do you shift that? What was the pivot you guys are doing to then change that up?
So our method is using a donor advised fund. Now, I'm sure if you're in the finance world, you probably know what a donor advised fund is. But
given there probably is a 15% chance that that's who's on this listening to this right now, why don't you give us a little bit of a primer on what that is?
So imagine you want to give to charity, but you're not sure which one you'd like to give to yet, and you want to be more strategic. Donor advised funds are an option. So a donor advised fund is kind of like a charitable savings account. You put money in, and you get the tax deduction right away, and you take your time deciding what charity you would like to get the money. Meanwhile, the
Okay.
money sits in the fund and it can grow through investments. So you can open one with Vanguard, Fidelity, Schwab, all of these, and put your regular capital in, and you get a tax deduction immediately.
Okay.
So that's helpful, but it's very unregulated. It's difficult to tell how much money actually ends up going into the charity space and making an impact, because a lot of these people, they essentially do want their tax write-off right away, and there's no real timeline of when you can get you want to give the money away. So you're like, oh, I want to wait another year to see if it grows more. And then there's another year that goes by, or oh, we're having a bad year. It's contingent on those market standards. So donor advised funds have been around for about 70 years, but
Okay.
typically you can only invest liquid securities. You can only invest cash, typically.
Okay.
So when you think about this, oh, why don't we invest all these money into startups and get a tax deduction? Why don't we donate to a startup curing cancer or helping with the climate? And they're doing the same mission, so why can't we do that with charity? There is a way to actually do that with a donor advised fund. And you have to find a donor advised fund that takes illiquid securities. They could take crypto, they could take units from a hedge fund. They can also take safe notes and convertible notes from a startup
Okay.
as their assets. So here's how you are a startup, you come across either an investor or family friend that you've asked before continuously for money, and you know that they have the capital and you know that they want to help, but for whatever reason, they cannot help at this time. You say, do you donate to charity or do you have a donor advised fund? Typically, if they're higher net worth, they do have a tax problem. You say, okay, instead of donating to your traditional charity this year or just putting money into your donor advised fund, donate to our specific donor advised fund. It's in Jacksonville, Florida. It's called Decami. Donate to there, open an account.
Mhm.
You instruct the account to purchase securities in the startup.
Got it.
From there, the donor advised fund holds those securities. So that's how you're able to get your tax receipt.
I got you.
But you're also helping that startup. So you have a more direct impact. It's not just like you're going with the traditional donor advised fund, investing in mutual funds, and then the money grows, but there's no tangible impact. You are letting your money grow and donating to a startup and helping the cause directly. And all of that equity, as that grows, you can see and have control over that growth. And then when the company sells, all of those gains can go to charity on a timeline, which is the startup's timeline.
Okay, got it. So play this back to you, just make sure I understand.
Sure.
So instead of sending money to nothing against trying to think of one of the big charities up there. United Way, right? You send them $1 million. Here you go.
Yep.
And they decide what and how to use that. And to your point, probably a large portion of those per dollar goes to operating expenses, et cetera.
Yes.
Instead, you send it to this fund, and then you say, I want that in this startup that's doing, colon rectal cancer research, right?
Yeah.
Because that's important. My mom passed away from that.
Right.
So they buy those shares, they basically invest, get it securities back into the fund. So they're going to hold that, very similar to like a angel investor or venture capital fund. They go off, they do their thing, they help cure colorectal cancer. So they're a $1 trillion company.
Yes.
And they sell and exit. That then money comes back, and then you get to reinvest that. Not only did you fix the thing that you were most interested in, but now that money comes back to get reinvested in other charities.
Yes, it can go into more startups, or you can also donate it to a hospital that helped your mom, let's say.
Yeah.
Your school that helped your path. Anything that is not directly yours. So you can't pocket the money, but there are a lot of flexibilities with where the capital can be deployed. And I want to make sure that I understand it is tax-free, because it's not your money. It is the donor advised money. So there's a huge impact there that you do not have to pay taxes on that giant sum of capital. And I like what you said. I'm sorry about your mother.
That's all right.
But
she lived a good long life, but
great.
Something's coming for us, whatever it is. But yeah.
But when you donate to the United Way, there's usually an emotional impact behind that. Typically, when you donate to these charities, you have a story, and those charities have not produced any FDA-approved drugs. They do a lot of advocacy work, and they do a lot of tremendous helping children, keeping the hospital. But
or like Ronald McDonald, they help people while they're suffering. I mean,
Yeah.
there's a lot of really great stuff, but to your point, it's not, this just seems like a much more targeted ability to go after the things that matter to you.
Yes. So if you said, you don't know necessarily if your donating to the United Way is going to go specifically 100% on the dollars to the exact cancer that your mother had to work on a cure. It is not.
Yeah.
You donate
Right.
to a startup making that cause, and that's what we have at NextRound Philanthropy. We have a portfolio of startups. But say you come to me and you say, I want this specific cancer, we will track down those clients and help you build a custom portfolio. Because the way we get paid is we have equity in these companies, so we don't charge any fees. So it is the likelihood of a startup coming and working with us is higher because we are trying to ensure them consistent capital.
Yeah, and look, I'm always a fan of places that means you have skin in the game. This isn't
Okay.
just some broker fee that you take a cheap
No.
piece of and you're never to be heard from again. But the other thing I really love about it is the money, so again, obviously there's risk, right? So some of these
Right.
startups won't work for a myriad of reasons, but the
Right.
ones that do means that my one-time investment comes back to me to continue to invest in the things that matter to me, which is, I think, is a hell of a thing. So obviously I'm a little skeptical, like some people.
Yes.
What are some of the downsides? There's never a free lunch, but like, are there any downsides? Am I just, my skeptical self needs to be quiet and accept that this is just a really great deal?
The reason that one might be skeptical is that it seems so revolutionary that why haven't people figured this out before?
Yeah, right. It's like if it was, it's anything that's like almost feels too good to be true is like, well, wait a minute, why isn't everybody doing this
Exactly.
everywhere?
And donor advised funds typically charge fees, and that's how they make their money. Venture
Okay.
philanthropy firms also charge fees, and that's how they make their money. So to have a business model that doesn't have any fees at all is really rare. And not a lot of people are willing to take that risk and go long term like we are. So we might not
Right.
make any money for 7 years, but when we do, then we will benefit. But we are willing to take that risk to try to help these companies.
Yeah,
So
but and quite frankly, to me, it's like, so I got the fees possibly deferring that and interest in doing that previously, but it really sounds like, so again, go back to the United Way and all these great organizations, they are, they do have operational costs because there is no upside revenue wise for them later. So I get that, but you're basically offsetting when you guys get paid to do this administration. Because I would
yes,
assert that's the other reason most people wouldn't do it. It's like, well, now I got to be involved in everything. I
right.
don't really want that. I just want to do my money. You guys will bridge that gap for people.
Yes, and we
You
also, so
know,
these, yes, sorry. And these
go ahead.
people are our portfolio clients, so we do meet with them every single week and we update them. So you can be as involved or not involved as you like. We can
Yeah, it
give
was going to be,
or you can
that
meet
was
the
going to be my next question. So if I want to be on the board or be involved, I have the ability. And if I just want to give you guys the money and go cure cancer, please.
let me know when,
Right.
let me know how the progress went, let me know how clinical trials went.
Yeah.
Typically the portfolio, unless you'd like to be very specific, because we do understand, like you said, that there are a lot of startups that don't make it. But our hope is that the startups that we have picked are startups that would make it if they had capital. So there's
Yeah.
not like
Understood, of
a market
course.
facility there where they're relying on a certain sector of the market. There's a high need, and current institutions are not filling that gap.
So to bring it full circle, right? The people you had to say no to, right? The ones that you were like, this has got a real chance, right? If they just had the 3 million, 7 million, whatever, you're now able to say yes, which is awesome, right? Not just for your own personal fulfillment, et cetera, but look, I'm a fan of opportunity, right? I mean, it's kind of the
Right.
American dream. So it's great that you're going to provide that, but more importantly, towards the target for the things that are important, not just commerce, because people can go do that themselves.
Right.
It's really awesome. So what is, so obviously that's what is eating up your day to day stuff. What do you think in the next, 1 to 3 to 5 years? What are you looking to create for the future? And what do you think are some of the obstacles? It feels like one of the obstacles, let me take a shot even at one of them is because it's very similar to my last company where we were doing stuff before the cloud. It was cloud stuff before anybody knew what the hell the cloud was.
Right, right.
So you kind of had to explain it. I would imagine you have to explain a fair amount of what you're, so people don't think, oh, this is just some scam to
Right.
get my money and then run away or whatever. Like, is that one of your main hurdles, the education side of things?
Yes. And I also want to make clear there's a reason why we don't open our own donor advised fund and do all of that is because we want to be a degree away from the capital. So the
Yeah.
money is invested in a donor advised fund that you can check out that is fully vetted, fully compliant. And then
But you don't really have any
basically
control
do it
over it.
without us. So we are hands off, but there are
Yeah.
portfolio clients. So
Got it.
we have some sort of direction, but yeah, we're hoping to avoid the scam conversations, but you're right, John. The typical conversations that we have are a lot of our time is spent trying to tell people that it's real, and we are receiving very positive feedback, as most young startups who come up with something new have, but the real success will come when we have consistent donors, because it's an
Yeah.
annual phenomenon, and these startups don't have to raise year after year after year. And then we have our exits, and we have partnering with charities or hospitals or universities. Typically would want to choose underserved charities that are also not hitting their metrics in the market. Say they lost a grant. There are some charities that do receive grants from the state and the government that are not receiving any. And there's so many things that they would like to do in their plan, but they don't know how to raise money as fast, or it's really difficult for them to have a venture arm, which some charities do too. And they have to invest later because they also are a little bit skeptical their donors not coming back if there's a failed product.
Yeah. So there's a chunk beyond just the kind of instance-based conversations you're having with people because somebody's interested or whatever. Is that one of your goals for the next period of time of just like almost kind of putting together a, I hate to use the word packet, but that's the only thing that comes to my brain of like, hey, this is if you're on the I need money side or if the I'm giving money side, here's the things you need to know and how this is different from, again, traditional VC or angel if you're looking for the funds or just a regular charity deposit from the philanthropy people out there.
Right, exactly. So we have all the startups. There's no shortage of startups needing money, as
Yeah.
you know, but there really is no shortage of donors who want to give, but we have to make sure to make that match.
Yeah.
The model is fully functioning. We do have completed deals. We have companies that have received checks and that are working hard to go to their next milestone, which is great. So the
That's
model
awesome.
works. So if let's say someone on this episode or someone has a startup and they know someone who has said no to them in the past, one of their family friends, now you can offer them a tax write-off instead of asking for money. So that's something that we can help with immediately. But as of our current donor network, that's something that we're using our momentum now during summer to build that up. The typical maturity timeline, John, is that people think about what their investments are going to be during summer. They decide by Labor Day, and they execute before Thanksgiving. The late bloomers are not the people who give to charity with their tax sheet last minute are typically under $1 million. So the that we want and typical check size for us is between 3 and 7 million on average. Means that we would have to hit those larger targets and catch people during this gap before they go to Thanksgiving, and they make sure and they talk to all their families about what they're going to do for the year.
Yeah, clear. And if somebody is watching this and is interested on either side of that, what's the best way for them to get a hold of you guys?
Sure. If you go on our website, nextroundphilanthropy.com, there's a book a call button, and the book a call button sends the book a call button straight to me, so I get a notification in my email. So if you'd like to talk to me, and there are other members on our team on there as well that would join, we're happy to explain the process to you. I try really hard not to be a salesman. I'm not a salesman because I really do want to find the right donor. And if it's not a match, then it's not helpful for anyone, the startup or the donor. We want everyone to succeed. We're all on the same timeline. We all get paid at the same time. So very low stress conversation.
I get it. I mean, and it's not even that you're a matchmaker. It really is, look, this is a long-term commitment for everyone involved. So we got to make sure it actually works. I really like that because that's how I built and sustained every business I've had is it's all about the relationships. Obviously going to provide value and execute and all that jazz. But, at the end of the day, it's how do I give value to you, and you're happy to write me a check when I do that for you. I think it would be the same exact thing here: is how can I take these funds that you're gracious enough to offer, and then go do the thing that your intention of having those funds, create that.
Now, I also want
Right?
to last thing to mention the timeline. So I know that this doesn't necessarily solve the problem of when people ask for investment, sometimes they're asking for strategic help or partnerships with these venture capital firms who are experts, who do know how to get through FDA, who do have all these
Yeah.
skills. So we
Yep.
can find, if we happen to find a donor who has those skills, that's great. But this is more to get through that gap to where you are venture capital ready, to where you can receive those partnerships. So
Yeah. Which I mean, obviously, again, I would assert most of these deals they may not be looking to be unicorns, but they're looking to grow the company, and that would be the next stage, right? So again, it gives what I love about it is it gives them the breathing room
right.
to grow the way they need to, because as you know, any team, any product, there's a fair amount of failure with the success. So it sounds like you really help them bridge that to the next level of funding, and then
Yes.
at that point in time, they kind of have their crap together. No offense, and then they can prove that they're now ready for the next round, which is it's really great.
Yes.
Well, I really appreciate your time. It's really, I mean, again, I think the key is let's get this out there, because this
Right.
seems like there's the only losers are and I even hate to use that word. It's just the people that can't get it together with any new product or new innovation. That's a possibility, but those will happen anyhow. But otherwise, there's really no losers in this, because they get a tax credit for doing the thing which they were going to get anyhow, so they're getting the same thing. But this whole ability to really direct things almost like a laser
Yes.
focus is just it's amazing. Like I would want that if I had a couple mil to give. So
Thank you. And yeah, this typically the question that I receive sometimes is, Daniela, how do we know that these are not just companies that can't get VC funding and are more of just the leftovers?
yeah,
These are still highly vetted because, again, we do not make anything until we know it's going to be in market. So these are not vetted a little bit differently than venture capital firms, because we don't have a checklist. We look more for talent,
yeah,
and we of course have advisors who help us look at the data and vet the data. But if that makes sense, then and we see there's a possibility, then we go through. And
yeah.
there
And
are
just for those skeptics, so this is my skeptic talking to you. If we can just get 10% of that 50 billion put into this kind of vehicle, that's 7 times the amount of funds. So it's not that they're leftovers, but there's only $7 billion to give.
right.
That's not a lot,
And
right? That goes
some
pretty quick.
only make 2 to 3 investments a year.
Yeah,
And those are the firms that you need to have that strategy, and they only take on so many. So you have to wait another year or another year. And even then it's competitive, and you're sending out thousands of emails, lots of LinkedIn's, asking your friends and family. So
exactly. And well, and the fact that you guys only get paid on exit
yes,
really means you're in it to win it,
yes,
right? Because that's the skin of the game. Like that. So anyhow, skeptics out there, give it up. You could still be skeptical a little bit, but talk to Daniela. She'll understand. She'll explain all the other pieces to it. And I really appreciate your time, and let's get people shifted over to you guys. I think it's a no brainer.
great. Thank you so much. I appreciate the visibility.
Yeah, thank you.